Markets have been relatively stable over the last few sessions. The S&P has been holding steadfastly above that 1,000 mark. There has been a little bit of turbulence in China, admittedly, where that index has been a relative underperformer of late. But generally, Asian markets have held out very well. Where do things go from here? Jim Rogers is with us with his perspective on global markets. Jim, morning. Thanks very much for joining in. What's your sense of the China scare over the last few days? On at least a couple of occasions in the last 10 days, that market has gone down 4-5% in a single session. And there's been so much talk about overheating and a bubble-like situation. Are those concerns justified in your eyes?
Well, the Chinese market, as you well know, doubled between October, November, and now. So any market that doubles in 10 months should slow down, should have a rest. I don't pay too much attention to day-to-day or even week-to-week fluctuations. I mean, I know you have to because you're on TV. But I'm watching China. China is still going to continue to grow during the future, and I haven't sold anything in China.
How do you read the regional data which is coming in now, Jim? Yesterday you saw the Singapore GDP numbers, which were quite a big improvement quarter on quarter. Sitting there, do you get a sense that things are definitely on the uptick?
Well, you certainly see that things are better, but remember, Dan, last year everything just stopped, especially at this time of year, August, September, November, October, November last year. Everything just stopped, period. People didn't order rice or beans or anything else. Now, if nothing else, if you just run out of rice and you have to order some more rice or some more beans, things look better. Things are better. They look better. Governments are spending huge amounts of money. So the people getting the money think things are better and they feel better. Is it going to last? I would suspect not. I'm sure we'll have more problems again in 2010, 2011, because this is just papering over the problems. It is not solving the problems.
Just to go back to China for a second, Jim, the Chinese industrial data at 10% plus continues to be robust. But there is a lot of concern about whether there has been over-lending by the Chinese financial institutions and whether they might start to tighten now for the rest of the year. Do you think those concerns are overblown or legitimate?
Well, I don't pay too much attention to government figures. I know the U.S. government lies. I presume that most governments just try to make things look as well as possible, as good as possible. So I suspect that's what's happening in China and elsewhere as well. However, the Chinese saved up a lot of money for a rainy day. Now it's raining and they're starting to spend some of that money. So some parts of the Chinese economy are continuing to do extremely well, no matter what happens in the rest of the world. Places that deal with the U.S. or Europe, retailers, for instance, are in fact suffering and will continue to suffer. There was a lot of lending, yes, and some of that money apparently has been going into real estate, property, and the stock market, which is not good, of course. But some of the legitimate growth, some of the growth in China is certainly legitimate because they're spending a lot of money.